All right, so right here, what you're looking at, by the way, what's up, gang? Thanks for watching. Make sure you like, subscribe, all that good stuff. But what you're looking at here is the Bitcoin halving ticker, which is saying that in 1 day, 18 hours, 45 minutes, 45 seconds, and counting, we will see the next Bitcoin halving, which means that the Bitcoin production, which is a maximum of 900 per day, will be cut down to 450 per day, meaning that, unless the demand is decreased, Bitcoin's price is going to go up because supply and demand dictate that, right? So, but there is an argument that's going on right now, and the Bitcoin halving is different, but is it priced in? So what they're saying is, is the Bitcoin halving already priced in? So did people already make the moves that they would make? And is the market already set up for the Bitcoin halving, meaning that, we shouldn't really expect too much volume increase or price increase because, it's already been calculated and priced in. And institutions launching Bitcoin ETFs this year has bowed the Bitcoin price to record levels. What does it mean? Does that mean the impact of the halving, the 4-year slashing of Bitcoin reward, could be relatively muted? They're saying hey, is there really going to be a significance of the halving because did everybody already make their moves anticipating this halving? My personal opinion is no, because, regardless, first of all, we've seen this cycle time and time again. We've seen this cycle 3 times now. That's number one. Number two, the rewards are cut in half. The production of Bitcoin is cut in half. So if the demand just remains the same, the Bitcoin price has to adjust up. And typically that doesn't happen for about 6 months to a year-ish after the halving. So I guess I think some of the argument that people are making is based on the fact that we've already seen 3 all-time highs before the halving. We've already passed the last halving's all-time high 3 times. And we haven't even got this halving yet. That is crazy, and that's why I think, no, this thing is not priced in. Let's continue though. So this year's halving, the quadrennial slashing of the amount of new Bitcoin entering into circulation may be the most important since the first one, 12 years ago. And yet, despite intense interest in the event, its price impact may be more muted this year than previous halvings. Recently launched protocols like ordinals and an increasingly robust mining sector mean the effect could be relatively soft. This article is part of CoinsDesk feature of Bitcoin package. So the Bitcoin halving, expected to take place late Friday night or early Saturday, comes with heightened expectations. In each previous case so far, the halving preceded massive sector-wide rallies. There is an ongoing debate whether this halving is priced in, or whether the reduced amount of Bitcoin entering into circulation, this time dropping from around 900 per day to 450 per day, will create a kind of supply shock that will drive prices up, assuming demand for Bitcoin remains constant or increases. I don't think it's really a question if the demand will increase at this point. But let me just continue. There are 2 economic theories that explains this debate. On one side are those who believe the halving is priced in, believe in efficient market theory. That they say because the event is known in advance, which it is every 4 years, and everyone shares the same information, it is possible that Bitcoin is currently undervalued. On the other side, there are those who point to a historic 4-year boom and bust cycle for crypto and or the aforementioned supply and demand constraints. Whatever theory you believe, it's worth noting that this Bitcoin halving is already markedly different. For one, it's the first time in Bitcoin history that the Bitcoin's price has increased before the event. That is a fact. We've already seen Bitcoin get to 73,000. Just the fact that when we did see a $60,000 Bitcoin a couple of days ago, people were like, the sky is falling, it's just all bad, Bitcoin is down, and you see a lot of the Bitcoin haters who already are probably mad because they didn't get in the market, and they seen Bitcoin triple in the last year. So they're like, oh man, if I would have got out these mutual funds or these stocks or this gold, I could have 300% profit. So anytime they see a dip, they love to rub it in Bitcoiners' face. But a $60,000 Bitcoin is still significantly higher than we started the year with. So what's the problem is? So that's largely because of the launch of nearly a dozen spot Bitcoin exchange traded funds in the U.S., which have been vacuuming up Bitcoin at unprecedented rates. BlackRock's Bitcoin fund, for instance, has the 5th fastest inflow of any ETF so far this year. Now think about this. These ETFs alone are buying on an average more Bitcoin than is produced per day. So when you see these guys buy 50,000 Bitcoin, or even just 5,000 Bitcoin, that is the equivalent of over 5 days. That's just one company making moves like this. Then you see the Michael Saylors buying up Bitcoins by the thousand. That's just one person. And keep in mind, these are only the public companies that we know about. How many companies that aren't public, that don't have to disclose their Bitcoin holdings? How many individuals like me and you, but maybe just have millions of dollars, who are buying up Bitcoin that doesn't have to disclose and won't disclose? So now when we get to a point to where there's only half as much production being minted in Bitcoin, well, that means that now you're gobbling up even that much more than's being created. And that's just going to make the prices go crazy. And yes, we will have people that'll be more interested in Bitcoin just because it is now in ETF form. Because now those ETF issuers, the Fidelities, they're micro-blasting emails to their clients like, hey, Bitcoin, the best performing asset in the last 10 years globally ever in the history of the world. You can get it now through us. Commercials, as you've already probably seen on social media and TV. So yes, now it's being commercialized and marketed like it never was before. I don't see the demand decreasing. I see it increasing. There's more work to do, but the industry has made significant progress in making Bitcoin more accessible and easier to use since 2020. Miles Sutter, Bitcoin product lead at Cash App, told CoinDesk in an email, while the recent rally has been led by institutional investors, with past halvings, we've seen a positive sentiment shift in the market that attracts new retail traders. That's the me and you. I think the cycle will repeat itself. What's different? The institutions of Bitcoin has another element over the above, changing the kind of buyers of Bitcoin, or the way they enter the market, meaning now they can enter it through the stock market, IRAs, retirement funds, pensions, other types of derivatives. People don't have to hold it themselves. They don't have to go to an exchange. If they don't want to, they can use traditional financial methods that they're already used to. I'm speaking for like those who are older, who don't want to get into the tech of these digital wallets and custodying your own Bitcoin, and they don't mind having to wait to business hours to do their trades. They're going to have more exposure. They're going to have more interest because they're going to see this as an asset that is rapidly increasing. And now they see it as a legitimate asset. Now it's just not us fringed, cultish, blockchainian Bitcoiners saying, get the Bitcoin, it's going to make you rich. No, now it's their investment agent telling them this, right? Now they're reading about it in the Wall Street Journal as a stock option. Mutual funds or index funds that are blending in Bitcoin. So now the availability is that much easier and legitimized to some people. Now the FUD is dying down, as I told you it would. Let me see where I leave off. In previous years, the biggest name buyers of Bitcoin were Michael Saylor, relatively unknown software company MicroStrategy, known Bitcoin fan Jack Dorsey's Block, and Elon Musk's Tesla, which partially walked back its commitment due to environmental concerns. So like, when they said, oh, it's so much of a, carbon footprint, oh, God, whatever. So ETFs changed that forever. That isn't to suggest that Wall Street doesn't have its detractors. Of course it does. But it is significant that firms like BlackRock, Fidelity, Franklin Templeton, Van Eck, and Wisdom Tree are all clamoring to be the first to market and offering a traditional on-ramp into the nascent digital economy. Bitcoin, once thought to be the Wild West, is becoming normalized, and no one's quite sure what is on the other side. So I'm gonna end it there. We did see, because of this Middle Eastern conflict that's going down, let's get back to the halving. We have seen that because of that, we've seen a dip, not just in Bitcoin. I mean, my mutual funds are also down, so my stocks are down. Traditional markets are down because of the anticipation of what could be a global conflict that could get nuclear, which sucks to even think about. That would kill all of the financial markets. And hopefully it doesn't go there. Let's all pray that it doesn't, not just because, for our financial gains that we would lose, but, for humanity itself. But it's starting to recover as of now, which is a good thing. And, the Bitcoin halving in a couple days. What we typically see after the halving, I think last time it was like maybe a year-ish after the halving, is where we've seen Bitcoin go from 8,600 to about 70,000. So like I was saying before, as long as Bitcoin is over 55,000, which it looks like it's going to be, if it repeats the cycle, which is a 3 to 6x, 3 to 6.5x, that means that we're looking at $180,000 to $400,000 Bitcoin, which sounds crazy to say out loud. I'm not banking on it getting that big. I don't need it to. I do know that I expect it to be at least 150, which also will drag up altcoins, which should make a lucrative bull cycle, and that would be fine with me. Anyway, make sure you guys like, subscribe, let me know what you think. Comment in the comment section, all that good stuff. Follow on Twitter at CryptTalk, Blockchain Crypto Gang on Facebook, etc. Thanks.